It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to the Real Estate Breakfast as we talk about what else? The Australian property market, of course. And look at that, we are nearly into July. How is your brain coping with the amount of ups and downs this year? Well, I say this to my friends that are struggling, hang in there. Or should I say, hold on. Things will change. Nothing remains constant, especially when it comes to the property market and the cycle that we are in. We are living through it together. Tough times. However, if you've got a positive property story that you would like to share with us and others listening, send through the voice message. The link of our voice recorder is below, or of course you can email us anytime to myrealestatepodcast@gmail.com. Yes, it is a Friday. The end of the working week has landed, June the 26th. Let's take you to Brisbane right now to catch up with Asti Mardiasmo, the Chief Economist from PRD. And you have got a new report out today. It is called Where to Buy Next, Capital City Suburbs Offering Value in a Competitive Market. And your report is showing affordability is improving across several capital cities, giving buyers more options than they had before. Sydney, Brisbane and Melbourne are seeing more suburbs fall within reach, especially in the unit market. So Asti, first off this morning, where are the smartest opportunities emerging for buyers right now, do you think?
So definitely affordability at the moment has improved slightly across all of the capital cities, which is always great news. One thing that I do have to say, Craig, is that these are definitely not the cheapest suburbs that you can find in each of these capital cities, but it is as affordable as we could find it to balance things like livability, so making sure that you can access your amenities like your schools, shops, hospitals, making sure that the crime rate is as low as possible as well. Also making sure that there are some new projects and new development, particularly residential development, to make sure that if you are looking to buy a new build, then you're able to do so.
Okay, and your report also shows that units are becoming one of the biggest opportunities at the moment for first home buyers and investors across Australia. In Brisbane, Melbourne and Sydney, affordable unit options have increased. Am I using that right? Significantly creating pathways into the market. A lot of first home buyers are asking, is choosing a unit now providing the best balance between affordability, lifestyle and future growth potential? So I'll get you to expand on that one.
Absolutely. So units at the moment is definitely showing the biggest value. What we have found is that across all of the capital cities, so that's Sydney, Brisbane, Melbourne and Hobart that we covered in this report, we've seen an increase in the number of suburbs where the median unit price is below the relevant capital city. For example, we have seen an increase in the number of suburbs in Sydney where the median unit price is below the median unit price for Sydney Metro itself. And that is definitely a great finding and something that is really, really good for buyers right now. In Brisbane, for example, when we did this report last year, only about 40% of suburbs within 20 kilometres from the CBD in Brisbane is considered affordable, which means that it's below the Brisbane median unit price. Whereas this time around, 66% of units or suburbs that are within 20 kilometres from the Brisbane CBD is considered to be affordable in the sense that it has a lower than the median unit price for Brisbane capital city. And again, like you've just said, to balance that affordability with livability. And at the moment, most of the stock that are coming onto the market are units. So it increases their chances of being able to get into the market.
All right, let's go to Melbourne then. In your report, it is telling us that while Melbourne has been viewed as a slower market recently, your report suggests that it could offer strong opportunities for buyers seeking affordability and choice. Hobart, good morning to you. Also in your report, continues standing out for accessible pricing. And with more buyers looking beyond the traditional hotspots, are possibly these two cities becoming the overlooked opportunities of this year? What do you think?
It definitely is. I mean, I think many people may not realize this, but when it comes to the median prices in Melbourne and Hobart, the way that we look at whether it is that capital city that gives the best value is the difference in the median unit price and the median house price. In Sydney, for example, the median unit price is still in the suburbs that we've chosen for the report is still either half or a third of the median house price. In Brisbane, it's about 30 to 35% cheaper units, whereas in Melbourne, it's only about 20 to 25% cheaper, and in Hobart, it's 15 to 20% cheaper. So the smaller that gap between the median unit price and the median house price means that as an overall, the capital city is better value or has a much higher affordability for buyers who wants to get into the market. This is what many people not realize, is that gap between unit pricing and house prices is as low as possible in Melbourne and Hobart at the moment.
We are talking to Asti Mardiasmo. She is the Chief Economist there at PRD. When we come back, we'll talk about the search for affordable growth suburbs and the trade-off between new homes and affordable prices. We're back after this.
Listen to expert perspectives with exclusive real estate conversations and supercharge your knowledge base with us. Every morning from 6 a.m. across Australia, we deliver you the latest property news, commentary and predictions from Perth to Cairns and from Melbourne to Brisbane, 7 days a week.
And talking of growth areas, Albany in WA is no longer just an historic, sleepy coastal area. It's one of the most competitive and impressive regional real estate hotspots in the country at the moment. If you have a look at the median house price, that is sitting just over 1.1 million. Annual house growth is up by 25.5%. which is pretty impressive, but not as impressive as what I'm about to tell you with the median unit prices. At the moment in Albany, that will cost you over $822,000 with an annual unit growth of almost 150%. That is impressive. Average house rent around $720 per week, and the gross rental yield is playing out for the houses with a yield of 3.5%. It is a Real Estate Friday. Asti is here as we look towards another weekend and the search for affordable growth suburbs. Let's have a look at this, because from Sydney to Brisbane, buyers are looking for areas that provide long-term fundamentals. It's all about that. But what should Asti investors prioritise when choosing their next suburb?
Investors are at the moment a little bit of, I wouldn't say the word pain, but it's definitely some uncertainties when it comes to what will be passed as a bill or a legislation from federal budget changes. And of course, we've just also heard about some of the bans when it comes to using your SMSF particularly in purchasing residential property. And what we are definitely saying with this report is that investors really need to be looking at not only affordability to try and minimize some of their costs, but also what is the rental yield that these suburbs are giving you, as well as vacancy rates, to make sure that the income cash flow is there. And of course, we want to have a higher rental yield as possible. The best would be just above the median, rental yield for that area or that capital city, and as low vacancy rates as possible. And the other item that I would definitely look at as an investor is making sure that at least whether it's that suburb or the postcode of that suburb has a lot of new commercial and infrastructure projects coming into the area, because that is what is going to sustain the level of price growth and the commercial activity and people wanting to live in that area.
And the trade-off, we should look at this between new homes and affordable pricing. One of the biggest challenges, of course, facing buyers is the cost of new housing supply. Many suburbs offering new builds are also closer to capital city median prices, reducing that affordability, which everybody is watching so closely on. Is then buying established property becoming the smart move for this year? What are your thoughts around that?
It really depends on the financial strategy and what is the purpose of that particular purchase. Because if you are an investor and you are wanting to negatively gear, if the proposed federal budget changes do get passed and becomes legislated, then you don't have a choice other than going for a new build, which means that, that affordability question really does become an issue. And one of the things that we have done in this report is to try and find as affordable as possible suburbs that does have new residential supply, whether it's units, houses or townhouses coming into that suburb due to commence construction in 2026. So it's also about trying to widen your search into which suburbs do have the new builds and trying to find affordability within those pockets. But of course, if you are an owner-occupier and you're not concerned about negative gearing or capital gains tax or any of those items, then buying an established home at the moment is definitely the more attractive options, because it is costing more and more for developers to be able to put on new supply. And unfortunately, with the increasing in costs for that, it then gets passed on to the consumer.
Yeah, it's all about, as I said, affordability. What about those comments that I made? Because you would be tracking Albany in WA. As I said, the median unit price, 822 grand, and that annual growth, almost 150%. What a standout.
It definitely is. I think we're going to see a lot more of those type of growth and type of prices as we go along, with a lot of the new taxes that are coming on as well for developers to be able to actually develop new product, which then of course makes it a little bit more scarce in terms of new supply as well for developers to make it, financially viable. We will definitely start to see certain pockets where people may not have considered it before, but as soon as they see a new development, they're all running towards it because new investment tax laws and things like that. So I'm not surprised that Albany is tracking so well.
Yes, a lot of investors got in nice and early into the Albany market, so congratulations if you were one of those investors. Well, that is the new report. It is out today from PRD. It is called Where to Buy Next, Capital City Suburbs Offering Value in a Competitive Market. Asti, good to chat. Just before I go, where do they go to download that report?
Simply go to prd.com.au. It'll be the first report that you see, and it is, as always, is downloadable for everyone in the public. I believe in providing information for free, so please feel free to download at any time.
We connect you to the best real estate information across Australia. The Real Estate Podcast.